When people think of cryptocurrencies, they probably think of huge swings in the prices. But there are also a specific type of cryptocurrencies called stablecoins. Could you let us know what stablecoins are?
Yeah, sure. This is a very hot topic right now. So basically, stable coins are specific cryptocurrencies who retain their value stable with respect to another source of value, right? So what we usually say is their value is stable with respect to another entity because they are pegged to that end. So these are stable coins. These stable coins, however, vary, and there are many stable coins, not only because there are many types of pegs. For instance, you can peg a cryptocurrencies to the value of a fiat currency, right? So to the dollar. Or you can peg your cryptocurrencies to the value of a basket of currencies, as Diem tried to do. Or you can peg your cryptocurrencies to the value of an underlying asset, right? Gold or asset tokenization in general. Usually the most traded stable coins are pegged to fiat currencies and most notably the dollar. However, there is a big variety of stable coins because the way in which this peg is retained and maintained varies massively. And so the literature usually distinguishes at least 4 types of stable coins. One type is the stable coin that is pegged to the fiat and backed by fiat, meaning that in order to retain stability with respect to a fiat currency, you actually have the same equivalent amount, hopefully, of the same fiat currency as a reserve. Asset-backed stable coin, which is what we were saying before, so you retain the value with respect to a certain peg, which is another asset, such as a flat, a house, or a financial asset, a security, and so on and so forth. In that case, would be a derivative. And then you have as a reserve those assets. However, there are other technologies that are a little bit more complicated and that are more used and more diffused in decentralized finance. And these technologies are technologies that allow a cryptocurrency to be pegged to a fiat currency, notably, once again, dollar. However, this peg is not retained or maintained because there are reserves in dollars backing it, but it's backed all on chain, right? So there are 2 ways in which you can do a decentralized backing in stable coins. One way is to have cryptocurrencies that act as reserves for a fiat currency that act as a peg. And this is it's a quite diffuse way to have and common way to have crypto-backed stable coins, crypto-backed but fiat pegged. And then there is an even more complicated way, which was the one adopted by Terra USD, which collapsed in May, which are called algorithmic stablecoins. And these stablecoins actually retain a peg without any reserve whatsoever. So what is making the stablecoin stable are certain protocols that act in various ways. There is no single way to actually create an algorithmic stablecoins. There are different solutions that can be adopted. One way is to simply take out stablecoins from the market when the price is too low, so to shrink the supply and therefore raise the price again. And this is all automatic, right, done by the protocol, and vice versa, right? Where if the price has to be lowered, you actually inject stablecoins in the market. And usually you do so through the issuance of other coins that actually compensate for this transaction. But there can also be other ways. There can also be ways in which you actually simply take out or increase the supply of coins without actually compensating with the issuance of other coins. So there are more complicated technicalities. But the whole point is that even though stable coins are those type of assets, those type of cryptocurrencies that are defined based on their peg to some external asset, the different stable coins vary in the way in which they conceptualize the relationship between the backing mechanism and the peg. And the backing mechanism usually can be either collateralized, which means that you actually do have a collateral acting as a reserve in order to back the stablecoin, or uncollateralized, which means that, as in the case of algorithmic stablecoins, there is a protocol that does the job. It's not the holding of a collateral that does the job of stability. That's pretty much what stablecoins are.
That's a really interesting definition. It's really interesting hearing of all the different types of stablecoin as well. And after hearing all about the technologies involved earlier, and then talking a little bit about stablecoins there, I guess this kind of all brings us to the conclusion of a question that I think a lot of people think of whenever they hear about cryptocurrency. Because the term currency is in the name, I think that a lot of people are asking the question, is a cryptocurrency money? Do you think you could give us any insight into that?
Very deep and profound question that would actually require a lot of discussions and time. So my answer is, it depends. I think I gave an "it depends" answer to any question probably today, but that's the essence of the subject. It depends on many things. It depends on which cryptocurrencies are we talking about, but it also depends on what we mean for money. Because in order to give an answer to that question, we first have to understand what money is. And there is no single way to define money. There are many ways to define money. We have at least 3 different types of money in our current economic systems. We have fiat money, which is issued by a central bank. We have got commercial money, which is issued by commercial banks. We have got reserves at the central banks. So very different type of money. And even when we focus on each of these type of money, for instance, fiat money, we realize that monetary systems are not all the same, right? So until the 70s, we had commodity-backed money, which means that the value, going back to the stable coins, right? So basically, fiat banknotes were kind of stable coins in the sense that they were actually holding value because there was a collateral in central banks. And so my answer is, money is a claim. Money, that's the most general definition of money, right? So money is a claim against someone. Depending on how you interpret money, this claim is against different institutions. So it can be a claim against the central bank. It can be a claim against commercial banks. It can be a claim against someone else. It can be a claim against the specific individuals. If they're private monies, it can be or corporations, or it can be a claim against the whole society. It's a claim against someone. Then it depends which type of money you actually highlight. So given that there are a lot of money, then the question, are cryptocurrencies money, becomes extremely tricky, because we first have to understand whether cryptocurrencies are closer to central bank issued fiat money, which was the whole point of Bitcoin in a sense, peer-to-peer digital cash, or whether cryptocurrencies are closer to private banks issued money, commercial money. And there are 2 different parties here, because in a sense, if you say, okay, cryptocurrencies want to overcome centralization, but centralization in that case can mean 2 things, right? You may want to overcome the control over the supply of money of the central banks, so you want to counteract inflation. In that case, you understand cryptocurrencies as fiat money, and that's type of centralization, right? So control over supply of money and therefore inflation and deflation, which was in a sense the original aim of those producing Bitcoins, right? So the problem of inflation. But then you can also say, I want cryptocurrencies because I don't want an intermediary. So remember that in fiat money, there is no intermediary. So in that case, your claim against centralization shouldn't be up against an intermediary, because the central bank is not an intermediary. It's just a claim of last resort, right? A claimant of last resort. So if you want to get rid of the intermediaries, then you understand cryptocurrencies are commercial bank issued money. But in that case, it's a totally different legislation, right? It's a totally different money. So in that case, the value of money derives from banks being able to actually address my claims against them, right? So their liabilities against me, right? So that's a different thing, right? So when it comes to what confers value to money and whether currencies are money, you want to first check on what confers value to money. And in order to address this problem, you have to see these things that we just discussed. But then there are also other problems associated with money, right? Which are their properties, the means of exchange, the store of value that we just discussed, but the unit of account as well, right? And so there are even other considerations there And so you want to understand whether cryptocurrencies can be used to price goods, can be used to reward labor services, can be used to settle debts. In that case, it's the unit of account. But you also want to check whether cryptocurrencies can be used as an efficient means of exchange. So you want to understand whether it has, they are accepted, it has some form of legal tender status. They have very low transaction costs, so transaction can be settled and reconciled and settled. So finality period very rapidly. So, this question is very complicated because it's a multidimensional question. There is no single type of money. There are no single actors against which claims can be put forward. There are no single properties of money. So it's really a very complicated multidimensional question. So a lot of people would say, no, cryptocurrencies are not money because they cannot fulfill the three functions of money. However, this approach entails already a very specific understanding of the question, of the problem, right? So it understands a definition of cryptocurrencies as fiat money, so contemporary fiat money, and under specific circumstances, right, with specific properties. But money is a multidimensional and complex concept in the same way in which cryptocurrencies are. And so the answer to this question is not that easy. It would require a very in-depth understanding of what we are talking about, right? So even monetary system can be token-based, account-based. This is a very important problem, for instance, for central bank digital currencies that are emerging right now. And commercial banks are account-based, fiat money are token-based, so very complicated dimensions. That is an extremely profound and complex question.
Enrico Rossi, thank you so much for having explained to us what stablecoins are and what the cryptocurrencies are a form of money. It was a real pleasure. Thank you so much.
Thank you, Arnaud, and thank you, Jack. It was a pleasure.